Good afternoon, Muskegon.
Good afternoon.
This is Tony Williams.
And Chauncey Williams with What Do I Do Now? Your guide to credit, debt, and planning for financial success with 103.7 The Beat.
All right, man. Spring has sprung, man. It's beautiful out there today.
Yes, it is. It was 68 degrees last time I checked. So beautiful weather. We're here.
I think we've turned the corner. Old man winter's behind us. Now we can get ready to, get ready to do our spring cleaning, as well as, it's a good time to take a look at your finances too, right?
That's right. That's what I've been doing. I've been at home looking through I got a file cabinet at home with all my documents in it, going through it. I've been so busy, I haven't even filed my taxes yet because I got, personal and I have business. So I'm sitting there going through things looking like, April coming up. But I usually hold off anyway because I'm not getting anything back.
Yeah, I'm like you. I'm 15th. I'm a 15th kind of guy because I don't get anything back. I normally write a check, so I'm in no hurry. I'm ready, but I'm not actually filed them because I know what I owe.
Yeah. So it is what it is, and it's part of. I do like around these times giving things away.
Oh yeah.
Like clothes and shoes and stuff like that, and donating.
6-month rule, man. If you haven't used something in 6 months, chances are you're not going to use it at all.
Yeah. What is good looking at a shirt, some shoes, and then biblically it does that too. You do have to help a brother out, or sister out. Something you can have something sitting there for so long, somebody else see it. Like I had some football jerseys that I took from some players that played at Michigan State some years ago.
Okay.
They had the equipment, and I took them. So like some DBs or some corner, I just took them. So today I'm at school, a little student had a jogging suit on last week. Say, let me get one of them jogging suits. I said, I got some jerseys you can have.
Okay.
So he didn't know I was gonna bring some authentic Nike jerseys in that came from some years back. That's brand new. He was like,
still authentic.
He was like, whoa. He's like, I had it. So I said, yeah. It's like it's been past the 6-month rule. I probably just wore them at homecoming. So I just go and buy another one or something. But that was just good to see their face. So, like you said,
he didn't care. He was happy.
Yep, he was happy.
Yeah, he was happy. Well, I can't give my clothes to my son, so because he don't play that. Different eras there, you know what I mean?
Yep.
So, that's what we need to do, man. Share the things that you don't use anymore. Give them away. That's the last resort. Take them to the Goodwill, and that's tax deductible.
Yeah.
So you get a tax break for charitable contributions, provided you do the long form.
I do the long form, the little piece of papers they give you.
Oh, yeah.
Yeah, man, I do the long form on my taxes, too.
I track everything,
That's why I said, I track everything, mileage. So that's why I was telling you I haven't filed yet because I know it's a long list I got.
Okay.
So looking at that 1099 and just seeing things and from the companies that I've been working with, it's going to be a long way. But it's worth it.
But it's a good thing. That's, the tax laws are in your, to your advantage when you are an entrepreneur, okay? And that's what it's designed for those folks that are self-employed / employed. And you just get a lot of perks when you're self-employed. So that's good. Take advantage of them, Chauncey.
Okay, that's what I've been doing. So I know last week we talked about how to buy a car or lease a car on Bankruptcy.
Okay.
So I said I was going to keep that theme going. And what I brought in today was the 21 things you must know after bankruptcy. 21 things. So it's a pretty catchy thing, 21. And it just, like I said, it's taking me back through some history for myself. I do a class on Sundays, and one of the guys was talking. And it really hit home for me in this message this week for this show. He talked about when he came into his situation, he felt like, he gave me an example of 2 buildings. He said the Leaning Tower of Pisa and the pyramid. And I actually wrote his model down. And he talked about how the Leaning Tower of Pisa, they had to put so much sand up under it for so many years. And he talked about his life being like that. He said, well, financially, he looked like the Leaning Tower of Pisa. It looked like a beautiful building. But he actually was toppling over because he was too top heavy. He was worried about what he looked like to everybody.
His perception to the public.
His perception. And I wrote his model down. And on a pyramid, he said, I wish I would have built it like a pyramid. And he said, mission, gifts, discipline, and faith. He said, if I would have built my pyramid like that, I would have had a stronger foundation.
Absolutely.
So just looking at financial situations, like when you say when a bankruptcy or something comes, it's actually an opportunity to get out the Leaning Tower of Pisa.
Mm-hmm.
Because you were in a situation that you can fix. And he shared that with me. So that stuck with me. And I just want to get into some of those pointers. I know you said you brought in something about somebody that know something pretty good about bankruptcy that's running for the president, right?
Yeah, man. That's pretty interesting. I don't know what the national average is as far as the number of times an individual would file for bankruptcy.
Okay. I know that you can only do it for so many years between the spaces. I think you have to wait probably like 3 years or 4 years. I can't remember. I remember reading the statistic somewhere, but go ahead, brother.
I'm going to have to look that up because this is quite interesting. From 1990 up until 2009, we've had an individual that has filed for bankruptcy 4 times.
So now hold on. Give me the time span. Give me the time span again.
1990.
Okay.
He filed for bankruptcy, 1990, and the last time he filed was 2009, which is what?
20 years.
20 years ago.
So he did 4 times. So every 5 years he pushed a restart button.
Yeah, to the tune of millions and millions of dollars, even billions.
So every time the tower kept on leaning, he was like,
he bailed out.
Jump right in the new Leaning Tower piece instead of building a pyramid.
He would bail out. And his
That's scary.
His theory was that is what the bankruptcy laws were designed for, is to get people, out of a situation where they have overextended themselves, give them a chance to liquidate assets,
keep the money,
pay creditors a percentage on the dollar that they owe them while you are continuing to run the business. Okay, but in a lot of cases, in his situation, he actually had to give up ownership. Okay, the bankruptcy court said that no, we'll let you continue to run, but you have to give up ownership or stakeholdership in the business, because evidently they must have felt that he had, more than enough power that created the situation. And if we're going to allow you to pay creditors, pennies on the dollar, then we need to remove you while those other folks, the board of directors, try to run the companies to make it solve it. I mean, he had like 4 casinos, man, in Atlantic City, broke, out of business, closed, gone, thousands of jobs, people out of work.
Man, that's he want to run our country.
Okay.
I mean, today we voted, so I just hope some people got him out the way. I'm not even trying to be biased like that, but I mean, do you really want somebody to claim bankruptcy 4 times in a row out of 20 years? And
consider himself an excellent
presidential term only 4 years.
Only 4 years.
So he can make us bankrupt in 4. Everything we done
8-year term. If he got reelected, that'd be 2 bankruptcies.
We don't want to be bankrupt twice, America.
No, we already been through that. Because of course he had, there was some intertwinings of the
Great Depression Part 3.
Yeah, there you go.
That's what I see. Like mortgage meltdown, all that.
Highly leveraged. I think it was like $1 billion is what he had leveraged during that time. $1 billion.
During the mortgage meltdown.
Yep. Packaging up those toxic
loans,
peddling them off.
Those arms, subprimes.
Yeah.
Ooh, the nightmares for me.
Yep. So, unfortunately, he's not the only president or potential president that has had those kinds of financial dealings in the past. There was another group through credit unions and savings and loans about 20 years ago that went through the same thing, but yet they were able to be elected and run this country. So force everybody to go do some Googling, find out who these people are.
Do their homework and see how they took advantage.
Pull
a cloak over your eyes and make you feel good and make you push that button for them so they can take advantage of you.
Yeah, because personally, I don't even want one bankruptcy. That means, to me, that just says that you're a bad money manager.
It's a hard thing to overcome, man. I said, like, it's hard. Like I said, going through the situation I went through, it was a situation where you think business is up, and all of a sudden the subprime mortgage come. Because that's the business I was in. It affected, like you say, I was self-employed and employed. It got into my employee life.
Okay.
So it affected it in a way like, man, because when you're in the middle of a flip or you're trying to do something, because you remember the flipping market.
Right.
You finance
that's how you make
property,
money.
You flip it and you say, I can sell it, but you don't mortgage something. So you like, but you done did it a couple times. You done got ahead and you're like, I can purchase this property, I can do this. But then now you're doing joint ventures.
Okay.
So those joint ventures catch you up. So like you said, like I wouldn't want to go through another one in my life. I know that. I don't want to. That's why I'm here with the 21 things to do afterwards to build a pyramid and not the Leaning Tower of Pisa. Yeah. So I have those pointers for you, and just I'll be sharing them throughout, and just hang back, audience. Just these things help me, so I just want to be able to help you. First thing is, very important thing is, pay your bills early or on time right after your bankruptcy, because you got to build a good rapport in your financial credit report, especially those ones that's being reported. You want to make sure you pay on time or pay early or pay a little bit more where you're paying off things. Mm-hmm. So that's the first thing. That's the first point. Secondly, mainstream versus high interest finance. I believe we talked about some of this last week when we talked about the cars. Mm-hmm. You want to make sure you get the mainstream credit, like the major credit card, going straight to your bank, going straight to your credit union, getting the Rolls Royce of credit, not the high interest financing, because they're going to put you in the subprime field. And if you get subprime credit and you qualify for it and it's on your credit report, every lender you go in front of, they're going to try to push you towards subprime.
Okay.
So like you're going to be stuck in that loop.
Yeah, they see your track record.
Yep, of that cycle. So it's something that you got to make sure that you trying to shoot for the mainstream. And then, like you always say, cash is king. Right after bankruptcy, cash is king. You're going to have to put something down. Yeah. But not a lot. So you got to have some cash, some reserves to be ready to build that credit.
Liquidity, yes. Yeah, that's good stuff, man.
Most importantly, the next thing is when you in the high financing, it's an acronym. It's called YBFD. You're buying the financing dummy. Like when the financing, when you upside down on the loan.
Right.
So say if you were in a bankruptcy and they say you had to do this to build your credit, like I talked about the car, why would you get into a vehicle or something with 21% after bankruptcy? And you're going to keep it for 6-7 years.
Makes no sense.
It don't make no sense. You're going to be upside down, and you're going to find yourself having to trade that in, be upside down on another loan, and now you're going to be in that lap, stuck, having to pay Peter and Rob Paul to pay these finances down.
Yeah, and that upside down means basically that you owe more on the vehicle than it's worth. Yeah. So if you had to go out and sell that car, you couldn't sell it for what you owe the lending institution. And that same principle holds true with homeowners. So very good concept to understand is being upside down on a loan.
Right. Next is knowing your filing date and your discharge date. Memorize your date. When they give you your papers, when you say when your case is done, they give you your time it's a letter you get, and it says the date and time when your case has been discharged. And that's the time when you can go and try to build your credit. Most of the times it depends on what you do. If it's chapter 13, chapter 7, they say chapter 7 you go 90 days right after, but my number is 24 months.
Okay.
24 months. So you want to go after your credit. First thing you want to do is try to dispute everything that's on your credit report after them 24 months, if you could, because now you got a discharge letter, so everything else that's under that bankruptcy could be disputed because now it's in the court system. Mm-hmm. So those companies, they have record of them, but they don't actually have a revolving reporting system of them no more.
Oh, okay.
So that's something what somebody can do, go right away and do that. So these are just things I'm just sharing because I know that I hear people want to, they're entering it or they're about to enter it. And a lot of times I interview people and they'll say, I'm leaning towards that. Like I was talking to a client, she was talking about going bankruptcy. She had a repossession of one car. I was like, no, that's not a reason.
No, it's not.
They just bugging you. You can work something out with them, and I was able to keep her from doing that. So good. That's why I'm sharing this information so people you can contact and reach out to us and see that they can get that help and support. The next thing is co-signers. Avoid co-signers if you can.
Being a co-signer as well.
Yeah, I don't do that.
Okay. Don't be a co-signer.
That's an oath that I've taken to myself. And people know that from people that's related to me. Anything. I had a guy ask me a couple over the summer, like, yeah, I want to get a car. Could you co-sign for me? I'll pay you. I was like, nope. I was like, I said, I'll do anything else for you. I say, I'll even let you borrow the money.
Right.
I said, I cannot. I will not do that because I'm signing my life on a dotted line. And you can't do that.
Can't do it.
You better off buying a car for that person.
Okay. If you're going to co-sign.
Yep, you better off because once they come after that after that vehicle, if they repossess that car and they still owe money on it, they coming after you first because you're the cosigner. You're actually the primary holder of the loan.
That's right. Yep. And if God forbid they tear the car up, right, and don't have insurance, and then guess who they're coming after for the money? The cosigner.
The cosigner. The next one is large city versus small town. We talked about this with the car loans last week. Going to a larger city, you're able to have a little more wiggle room when it comes to getting approved when your credit is marginal with a bankruptcy, because you don't have those small knit areas where they can't gamble and help somebody in a situation like that. So we got cities like Grand Rapids close to us, Lansing, Detroit, where a client could reach out and get that help to get them back on the right track faster.
Yeah.
But like we was talking before we came to the show, people being taking disadvantage in our own city, man.
Oh, wow. Isn't it?
I mean, I just feel like that's something we need to expand on, because I know you working in insurance field, and I see so many young people buying new cars, getting vehicles, but they're going about it the wrong way.
Yes, they are.
Tony, they're not getting quotes from their insurance companies first.
Nope.
They're just happy to be approved for a vehicle to ride off. And the most detrimental time that they're doing it to our people is during tax season.
Yep.
So they putting a large amount of money down, being able to drive a car off. Because, see, they'll give you a car. I had a guy tell me that said they'll give you a car before they give you a house.
Oh, absolutely.
Because they know they can get that car back fast.
Yeah. Yeah, and they don't have that much invested in the house, in the car versus the house. Okay? Plus it's a depreciating asset as well.
Yeah. So I know before we came in, we were sitting talking. You had talked about one example where someone had tried to buy a car, and this is a small market. We're in a small market here. So they approved them for a vehicle.
Yeah.
And they came to you for insurance. And you mentioned two cases. One of them where it was a person, they said they needed $1,200 down.
$1,200 down. Because they had a bad, not only, they had a bad driving record, probably some credit issues as well. But they're in the car now, though. They've already put them in the car. They tell them, all right, now go get some insurance.
So now go play Where's Waldo.
Okay. Versus, all right, let me take a look at the kind of vehicle I'm thinking about purchasing. I'm going to go and get me 4 or 5 quotes to find out if this is a feasible, venture for me, versus putting me in the car. Then I'm going to go find insurance and realize that I really can't afford the insurance for the vehicle because it's a new vehicle, and I'm a young person with not a great driving record, questionable credit.
That's a setup.
Yes, it is. Yes, it is.
And this is a small market. This is in our city, people being done like that. That's being taken advantage of. They probably put a large down payment down. So then that money went in somebody's pocket.
Oh, yeah. You got to put the large down payment down.
Yep.
They want to get, as much as that residual income back before they allow you to drive off that lot.
Yeah. So then if you become a liability and you don't pay on that loan, they come back and get that car.
Yeah. Yeah.
So they got that money, but they got your money. They got your $4,000 in their pocket.
Yep.
And all you did was pay interest. You ain't never paid no principal.
All you did.
Whew.
That's all you did, man. And it's not good. It's ugly, actually. And I've had people walk out and say, well, I'm taking the car back. I tell them, that's the best decision you could have made today.
And then it could be on your credit report. It could be a negative item on your credit report, but we'll fight it. Yeah. I'd rather fight it than you just stress
and have a repossession on there.
Yep. You can have I forgot what it's called. It's not a repossession, but it's called like a I can't remember the name of it. When you give it up rightfully.
Okay.
Yeah, but it's
like you surrender.
Yeah.
Yeah.
They count it as back. Yep. But then as soon as you drive the car off the lot, it's
depreciation.
So then you gonna owe something, but you like, look, y'all gonna take this car back.
Right.
Like you can leave it there.
Right.
Yep.
Like I said, unless you take it back soon after that big down payment, but a good percentage of that is also going to be chewed up in your interest.
Yeah. You get so many days though to test drive it. So
state of Michigan, I guess 3 days.
Okay.
3 days when you sign a contract to rescind that contract. 3 days. Yep.
All right. Okay. Next is negative people. When you come after bankruptcy, negative people, because they're gonna feed you information that you probably can't come out of the situation. Like you might be stuck in it for your whole life, and you're not. You don't have to be stuck in it for your whole life. Making an agreement with your spouse. Somebody gonna have to be in control of the finances because you made a mistake. Mm-hmm. And like you said, bankruptcy is a mistake, a financial mistake that everybody shouldn't have to go through. So being able, if you've been through it once, or if you don't have to go through it all, keep those finances together and keep them intact. And one of the important ones is trusting your spouse, your woman, and her sixth sense. Like knowing if you're going to go buy a car, if you're going to go do something, sitting with your significant other and being able to see how they feel about the dealership, how they feel about what you finna get ready to go buy, or how you finna establish credit. It's good to sit down with that person and have a rapport with them and see what direction that you both can go in, because you both got to live with that stuff, whatever you purchase. That's just got me just, I don't like this, like when, the client that you say you had earlier, that's still like, that bothers me, man.
Man, it bothers
I've never
me.
bought a car like that. I always been taught and told, go to 3 or 4 insurance places. But now the people I have a relationship with, because I'm an educator, I always call them.
Okay.
I say, what kind of car can I get at this age? Now they say, oh, you doing good. You can do A, B, and C, and it'll be this much.
In this day and age, it's easy to shop, man. I mean, you
can go online.
Yeah, you can go online, or you can fax your information to a number of insurance companies, and then they can get back to you through a text message, phone call, fax you back. You can actually, it's a lot easier to do shopping than it was 20 years ago. So that should definitely be a part of the process, is to get that, 3 at the minimum, 5, at least 5 quotes on any vehicle that you purchase.
Okay. Yeah, so that's just worth it. Like you said, you don't have to ride everywhere and call on the phone. You can go online and put your information in, and you can get a quote right there.
Yeah.
Pre-approved. And the dealership will accept that too.
It's the state law says you got no fault insurance, and every one of them will give you comprehensive and collision coverage. So they got to go with it. Yeah.
They got to go with it. They're in the business to sell cars. So they don't care if you got it or not. They're like, as long as you drove off and they got you in that vehicle.
But it's your job to make sure that you're getting what you pay for, though. Just don't spend your money foolishly. Take your time. Don't rush into a decision when it comes to purchasing a car. Probably one of the second major decisions you got to make, other than purchasing a house, is an automobile. So don't get caught up on the new car smell. All right, make sure you understand the numbers that you're getting yourself into, because you stuck with that. You stuck with it for 5 to 6 years. So.
I know. The next thing I had was W-2 versus a 1099.
Okay.
I remember when I first got into my situation, I had my business, and I tried to. I wasn't produce enough revenue, but I tried to like either lease or buy a car with my business credit, but it wasn't around long enough. But now I'm to the point I could use it now if I wanted to, like buy a vehicle or a car or something. But I don't need no fleet or anything, so I'm like, I'm not trying to show off or anything like that. So I'm like, I'm not to that point. But if I ever could be, I'm to that point because I have a longer history in my business.
Yes.
Because I tried to do it right after my bankruptcy, but it was like you haven't had long enough history in your business to be able to do something like that. But I did take that as an option. Like, okay, well, my W-2, my credit report is taxed to this because that's a bankruptcy on here that's fresh on here, 24 months old. Even though I don't have nothing on my credit, but these secure credit cards that I have and these list of things, but I have a 1099 with business credit on it, and I have a bank account. And I had sufficient funds in there, but I didn't have a long enough history.
Right. They
So
want
my
to
history
get
wasn't long
history.
enough. So you got to have that history if you're going to use your business credit. And people do it all the time. You take a blow in your personal life. You got business. You can use those two to build in that way or frame. Or like I even know couples that are married, but they file separately.
Oh yeah.
Or they're not connected on paper, but they connected in Christ's way on a marriage license.
Right, and there are laws that favor of those individuals that's married filing separate because of the injured spouse, who may have some other child support from a previous relationship, things like that. So then, you would file separate. But you hit on the point earlier too about the 1099 and the W-2. Folks that have home-based businesses, they qualify for 1099 whether they know it or not. There's some expenses involved. So make sure that when you do your taxes, you take advantage of all these. I don't call them loopholes, but they're
benefit you. They'll benefit you.
Benefits that you get from having some entrepreneurial type of business.
Space in your house, you can claim a room, cell phone,
travel,
gas, hotel.
Yep, conventions, whatever that you go to is a part of your home-based business, be it a Mary Kay or Avon or whatever. So take advantage of those tax benefits if you have one of those.
It's worth it. What made me get into it years ago was a guy sat me down and said, you get your paycheck, they tax you at 36%, right? And then he mentioned that you go buy gas as soon as you get taxed at 36%. Mm-hmm. So then you go get you something to eat. They tax you there. So then you go buy your nice little shoes. You got Chauncey. You go buy a suit. So you got taxed all them places. And he say, you telling me you don't have no business?
Okay.
He said, that suit you probably wear it to work, won't you?
Yep.
See them dress shoes you wear that to an interview or something?
Yep.
To a business meeting? See that car you gonna drive that somewhere too, right? Mm-hmm. So that conversation helped me go towards getting towards 1099 and working for myself and trying to build early in those stages and being probably like 10 years away from that now. Looking back, like I'm 10 years in it. You know, it was hard building, but it's growing and I'm glad I did it. So it's like
because one day the W-2 gonna go away and you're gonna be strictly 1099.
Yeah,
and then you'll know all the nuances.
That's right.
All the advantages.
Like my brother Tony Williams right here. So, but that's the whole point though, to get there, to get there. So it's a good thing, and that leads me right into my next one. Faith, just having the faith to say, hey, if you've been in a bankruptcy, you can rebuild your life. You don't want to keep on doing like my friend said. He don't want to be in the Leaning Tower of Pisa, taking his family through that situation where they think everything looking good, but one bad move or one missed paycheck, everything fall over. Mm-hmm. So you just want to build the right foundation, just off discipline and the gifts and the talents and discipline and having a mission. And I know you mentioned this earlier, 3-year, 5-year plan on what it looks like financially for your family to say. So when extra come in, don't even spend it. Don't even spend the extra. Figure out how to live what you have and grow on from there. The next one is how much new credit is enough? So I got a list. It says a bank checking and savings accounts, a bank debit card, a few secured bank cards. That's the first thing I did. I got 2 secure bank cards where I put some money down, and it was on my credit report. Secure bank loans where you can go into a loan. You say you can put $500 or $1,000 down, give you a loan, but then you actually got the money there still.
Right.
You're paying it back, and then that builds credit too. So those are 3 quick ways to put you back in a situation where you have no credit or you coming out of bankruptcy 24 months afterwards. A new lease card, we talked about that last week. Home mortgage, if you can get one. Refinance mortgage. One thing I don't like is on my information I have, a home equity loan. Those are not good things to get all the time at all. Because that's all it's doing is keeping you in the loan. Then you got an extra loan on your house. And sometimes a lot of people forget that they have them.
Right.
And then they end up getting their house taken for $10,000.
Not worth it, man.
Not worth it. It's not worth it.
The goal is to pay the house off, save your money, so when there's when it comes time to do renovations or whatever, you got that money available.
The next one is joint and individual bank accounts. It's good to have those. A joint account and individual because it shows that you had the one that you pay the bills out of with your spouse, and then you had the one that you have for your own personal.
Right.
That check is being direct deposited, and the other one's being connected. Next is having an attitude that, hey, I made some bad choices. What do I do to rebuild and go back towards the positive way that I had? And don't try to get, we talk about this, the emotions back. A lot of times things are attached to people physically. Like it's tax season is going down. Now it's down. Everybody got the big checks going down. The Jordans then came out a couple times. I'm like, the Jordans come out every week?
Okay.
They come out every week, or what's going on, and just being able to say, hey, can we get back into building and saying, hey, I can't get caught into those traps, and being able to deal with that.
Yeah, I think that was kind of what we touched on earlier. When tax time and a person goes out and buys, like 3 flat screen TVs. I mean, what sense does that make? One, you can watch one at a time.
Yeah, one at a time.
But and take the money that you were going to spend on the other 2, and put it into an IRA. It can be in a safe mode. You don't have to put into anything risky if you don't want it. But the fact of the matter is that money is liquid. You got it, versus that TV that you stuck on the wall that's going to go away. It's going to depreciate in value, and you really have nothing for it.
I don't even know how I did it. I mean, we got one television, and to the point I don't have cable, and I don't miss it no more. It just got to the point where it's books out on the coffee table, it's books in the bathroom, it's books everywhere that, like last night, I watched Bishop Noel Jones.
Okay, you streaming.
On the internet.
Streaming, yeah.
You know, that was the strongest enough for my faith and my encouragement so I can wake up strong the next day. You know, so but that's what I'm trying to get to a point like that in my life. So I'm trying to watch the things and see the people that's opening doors for themselves through their faith and their encouragement and through their relationships. So keeping negative people away and building towards the right things. For the audience, first thing you need to do is just go and pull your credit report, sit down, and see the direction you really want to go in. And you know, I just want to share these pointers today. And I know you said next week we want to get them to the car.
Yeah, I think that might be a timely discussion to talk about the relationship between the auto industry and purchasing vehicles and insurance, and more specifically in our community.
Here, yes.
Okay, I think we want to focus more on what I've seen and experienced here in our community, and kind of warn people of the pitfalls of because it's a dynamic of things that's happening. Like you say, the income tax, and then car lots, have a huge inventory because we just got a new model year, new trade-in. So they want to move these products, and yet they're taking advantage of individuals, in my opinion, that don't need those type of vehicles at their age at this time. So, I think that'd be a good conversation to have next week.
They taking advantage of sending those little envelopes in the mail. Buy this car, do this, trade your vehicle in, you get so much. Then they show you like, here's the equation. They'll show you a new car, and they'll show you the trade in of your car if it be a couple of years older. Then they'll show you the difference. Like, oh, that'll only be $3,000.
Yeah.
You're like, ooh, for that new car, I only have to pay $3,000. So now you emotionally attached already, but you don't know that if you still got a loan on your car, you still owe that. But then why would you want to get rid of your good working car for something that to start the whole process over again? I can't do it unless I win something in the sweepstakes. I'm not gonna do it again.
Okay, be car note free. Have that experience for a while. Not saying it's got to be forever, but have that experience for a while. Give you an opportunity to sock some money away. So when you do, get ready to go out there and buy, you're gonna, like you said earlier, we're gonna pick the places that we're gonna shop. We're not going to the buy here, pay here, or the predatory type places, because we've taken the time to get our finances in order, our credit in order, and we can go to the reputable places and get good deals, and then be able to have affordable insurance.
And not be victimized.
Absolutely.
Because we're so excited about how much money we have, and it's nothing to us. No,
Right.
it's something.
And you know what else? You can buy that new car spray. You can go buy that at
They
Walmart.
got air freshener. I got them in my truck right
it's
now.
The air
It's
freshener.
black new car. Vacuum the floor.
So if that make you feel good, go buy you a can of that.
Yeah. Or
spray
get a
your ride
detail.
up,
I'll
clean
get the
up.
truck detail. I look brand new on you. You think I'm 2015? So that's how I just feel. It's an emotion. So I really appreciate today.
Yeah, I think we had a good conversation, good topic today, bankruptcy.
Yep, building your credit after bankruptcy. 21 questions. It's just something. If you hit me up on Facebook, Chauncey Williams, or Credit and Debt Help, or WhatDoIDoNow.biz, check me out. Tony's here. It's insurance time. People calling him. Call him before you go buy the vehicle, so
Please
he can tell
do.
you what kind of car you
Right.
should get.
Farmers Insurance, Tony Williams Agency, 752 Pine Street, downtown Muskegon. Phone number is 903-0314. It is a free quote. It doesn't cost you anything to shop.
Yeah, so when you have that free quote, when you go on car shopping, window shopping, you'll be able to say, I know how much I'm going to pay all together. So you have your note and your insurance together in one. And then now you work on the right way.
Yep.
Because what you'll do is you'll end up going in the car, and then your insurance might be higher than the car, and you stuck. And then you on the pride that you have, being shame, and being able. It's three things I wrote down: it's pride, shame, and fear. Saying like, oh, I made a bad decision. I don't want to take this car back. But now you got a car you paying a $300 note on and $400 insurance a month, and you like. But you don't want to lose the three of the shame, pride, and fear.
Because your boy seen you test driving it, and you hollered at it, so you looking good in the ride.
You know when the garage is in it, and now I gotta take it back. So don't let that go. Just do the right homework. Call Tony, get the insurance help, get your credit together. I'm Chauncey Williams.
And I'm Tony Williams.
This is What Do I Do Now? Your guide to credit, debt, and planning for financial success with 103.7 The Beat. 103.7 The Beat. 103.7 The Beat. 103.7 The Beat. 103.